Let's talk about the markets in 3 minutes then, Rachel. And let's start with that inflationary read. I mean, we have lots of conversations around this desk about these various themes and how they might lead to some sort of pickup in inflation. Meanwhile, the market is obsessed with how many rate cuts we get, of course.
Yeah, and I think Diamond is exactly right to pinpoint this question of do we see a resurgence in inflation, because that is what the Fed is really going to be looking at. It's why we've really seen over the last kind of few weeks that whole sort of enthusiasm towards, loads and loads of rate cuts really being pulled back and people getting a little bit more moderate with how they kind of see the inflationary picture. And I think one of the sort of things that he alluded to that's really overhanging all of that beyond kind of some of the longer term sort of demographic type sort of causes of inflation is this idea of fiscal spending. And it was the first thing that Diamond mentioned in that clip. And I think that's where you kind of sort of see that connection point to what the other big event that we have beyond the Fed at the moment, which is really this US election drama. And really, whether you see kind of Trump or Harris kind of emerge victorious next week, we do expect to see kind of more spending. And that really does suggest that we're going to see a rising deficit and potentially more inflation kind of coming through.
Yeah, you've seen the Trump trades rallying, long dollar, short rates. With the race this tight, I just wonder how much more room there is to get in on that this side of the result.
Yeah, we're actually starting to see some on Wall Street taking a little bit of money out of those trades. There was an interesting commentary from Societe Generale, I think earlier this week, looking at kind of the 30-year space. We've seen, as you said, long bonds in particular selling off kind of on these inflation, fiscal sort of spending kind of fears. And possibly they've gone a little bit too far. So SocGen was recommending people sort of actually maybe think about going into 30-year debt. So there is that question mark. But we did then see, of course, today, Bitcoin going past $71,000 for the first time since June. So there is still some room in certain trades, but it's a question of where you want to put your money. And do you really want to be going big into some of these trades that have been so widely flagged for such a long time?
We'll talk about the trades more. Where in the curve is going to be the most volatile in the next, say, 10 days?
Ooh, it's a really good question. I mean, I think we've been seeing kind of a lot of volatility focused on the 10-year space just because it's so liquid and it's such a benchmark.
It's the easy answer, Rachel.
It's a very easy answer. But I do think that the short end is also worth watching, because if we think about kind of all the different sort of things that are going to be jostling the bond market, yes, you have the election, and there you've got kind of an argument for potentially a haven play or for buying kind of the 10-year on that. But if you think about kind of what else we've got a ton of data. We've got non-farm payrolls on Friday. We've got the Federal Reserve meeting on Thursday next week, so just 2 days after the election, when we may not even still know the result. There's going to be an awful lot of scrutiny about exactly where the Fed is going. Do they cut at this meeting, and do they then signal that they are going to cut again in December? And then what do we look like for next year? So I think there's going to be a lot of volatility across the curve, but I would actually look at the short end as well as the 10.